Today, I'm going to be breaking down a super simple futures day trading strategy that only requires the use of the 5-minute time frame. But real quick, as always, if you guys do find value in today's video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But let's go ahead and let's hop into the video. Okay, so the strategy is going to be very simple. The main thing that we are going to want to focus on is the overnight price action. Now, don't click off the video yet. Let me explain. When the market closes at 4 p.m. EST, let's just say this is the market close, we are going to have price trading all throughout the overnight session, all the way into market open. Let's just say that this second red line right here is market open. What we want to do is we want to identify the highest point of price action during the overnight session and the lowest point of price action in the overnight session. Now, what we are going to look for when the market opens at 9:30 a.m. EST is we want to see price either break above the overnight highs or for price to break below the overnight lows. Now, from here, what we are going to look for is for price to pull back into this previous overnight high and to make it support. If it supports this area, we are going to look for a long entry with a stop loss set right below this low. If price were to break below the pre-market low and come back up into that previous low, we want to look for price to make this resistance. If it does, you are then going to look for a short entry with a stop loss set right above this previous high. It's a very simple strategy, so let me show you guys some examples. There was actually a really good example yesterday. This blue shaded area is going to be the entire overnight session, and this black shaded area is going to be the New York session. So here is our overnight high right here, and here is our overnight low. Now looking at the overnight high, price breaks above it right here. We are then looking for price to come back and make this area support. As we can see, it did it multiple times in this entire area. So as a result, you are going to be looking to go long, and your stop is going to be if price breaks below the overnight high with weakness. So we held this area 1, 2, 3, 4, 5 times. And honestly, this candle and this candle looked the best for longs. So your entry overall was somewhere in this area. Stop loss on the opposite side of this white line. And as you can see, you were able to capture a nice move into a new high a day. Now let's look at the day before. Here's the overnight high on the S&P futures. And then here is the overnight low. Again, we're keeping in mind everything in this blue shaded area. Price never broke above that overnight high. However, if we look a little later in the day, price did break below that overnight low, came back up and retested this area as resistance. So what would we be looking for? We would be looking for a short position with a stop loss set right above this area. Let's actually break it down to a 2-minute time frame and see if it gave a better entry. And sure enough, yes, it did. Here was your entry to go short on the 2-minute, stop loss set right above here. And as you can see, you were able to capture that into a new low a day. Let's go ahead and find some more examples. Looking at the day before that, here's your overnight low, here's your overnight high. As we can see, price did break above that overnight high, came back and made it support. Specifically on this candle right here, this looked the best. So again, you could have been looking for a long entry. Stop loss is on the opposite side of this white line. Price continued into a new high a day, pulled back into a higher low before continuing again and again. So that was 3 examples in a row in the last 3 days. Now, obviously, keep in mind this isn't going to happen every day, but it is a strategy that presents itself quite often. We can go ahead and look at this example as well. This was your overnight high. Price broke above it, came back, retested it. You could have been looking for longs in this area, stop loss right below. Price did push into a new high a day, so maybe you got 1 or 2 trims off on the way up, and then you probably stop the rest and break even. Let's go ahead and look at one more example right here. Here is the overnight low. That low was based more than likely off of news. Price pushes to the upside. We have our overnight high somewhere up here. Price can never break above it. It starts to flush. It breaks below that overnight low right here with a very bearish candle, comes back up, retests the area, rejects it. Again, you would be looking for a short entry with a stop loss on the opposite side of this white line with strength. Like I said, this is a very easy strategy that you can start implementing right away when day trading futures based on the 5-minute time frame. So make sure you guys take some time, go back test this on TradingView, because again, the market does offer this setup quite often. There's literally another example right here. But again, it's a very easy strategy that you can start using right away. But if you guys did find value in today's video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.